Hi, everybody. My name, like she said, is Malika Brown. I am a retired cosmetologist. I actually serviced my last client January of 2021. So I have been in the industry prior to retiring, of course. I've been in the industry since 2009. Just a little bit about what I did in the industry. So I've been every single thing that you can think of and ending my career off as a salon owner. So along the way, I got really, really passionate about taxes and bookkeeping. And when the pandemic came around, it was so important for me to be able to help my friends, for me to be able to help my other work colleagues get the services and get the assistance that was out here for them. Okay. And a lot of my beauty industry colleagues did not have financials. That really hindered us along the way, not having financials. So, from that, National Beauty and Barber Tax Service was born because I wanted to help in a different capacity because I've seen so many sides of the industry. So that's enough about me. I know you guys don't care about what I did or what I do. So I'm going to actually share my screen. Give me one moment and we'll jump right into it. All right. So hopefully everybody can see my screen. And I want to start off with a disclaimer, you guys. This is not hard. I know that we are not taught this in cosmetology school, how to actually run the business side of the industry, but it is totally doable. So I want everybody to come in with the open mind, just ready to take something away that you can implement in your business like yesterday. Okay. First thing that we're going to touch on is how important financials are to the structure of your business. Okay. If you do not have a strong financial profile on paper, you are locking yourself out of so many opportunities in the industry. And what I mean by that is that we are all in business to grow, right? So not only are we trying to grow our clientele, but we also want to grow because a lot of you guys I know are passionate and you want to retire comfortably from this one day. So with that being said, getting a hold on top of your finances is going to be the key that's going to get you over. It's not going to be technique. It's not going to be your artistry, unfortunately. It's going to be how you actually do business. Okay. So, a quote that I always tell my clients is master your numbers, master your success, because in the beauty business, every penny has its own story. So essentially, what that means is that financial literacy is non negotiable. Okay. Even in the beauty and barber space, because we're such a cash heavy business, it's so easy to have a lot today and it's gone tomorrow. Okay. So when you master your numbers, you always know what your business is doing. And in turn, you master your success because once you know what your numbers are doing, you control the narrative. Okay. And you can plan for rainy days. You can plan for slow seasons. You can take that vacation with your family and not have to worry about being stressed that your business may fold because you want a vacation. Okay. So no matter if you're only spending a little here, a little there on things that, let's be honest, we're hairstylists. We buy a lot of stuff we don't even need. Okay. So when I say that any income that you have going in, you have to tell the money what to do. Okay. You have to tell it where to go. So that's what this quote is about, just the how serious it is to really watch your money. Okay. All right, so I'm just trying to scroll, guys. Give me 1 second. Oh, sorry, you guys don't want to see that screen. Okay, there we go. All right. We are going to start at structures. Structures are so important when you define your financial game plan of how you're going to move in the industry. Okay. So we have single member and multi-member LLCs, and they file Schedule C. Majority of you guys more than likely are a single member LLC, or maybe you have a partner, but you guys aren't an official partnership. You're going to file a Schedule C, and that's the form that you put your business information on when you file your personal return. Okay. So for income reporting, business income and expenses are reported on that 1040 form. That's super important to know because sometimes people get it confused. They're like, no, I have an LLC. I'm supposed to be filing separate from my business. But if you only have an LLC, single member or multi-member, you're one and the same in the eyes of the IRS. Okay. You pay self-employment taxes on the profits earned from the business, unlike how partnerships and S corps and C corps do. Okay. But majority of you guys probably are more along this line of the single member and multi-member LLC. Just the key thing to take away there is that this form, Schedule C, is literally one sheet of paper and it goes with your 1040 form. That's where you put in all of your income, you put in all of your deductions and things of that nature. Next, we have partnerships. So you may see this in the industry, but it's not super common in our industry. But you have partnerships, and these are true partnerships. So if I go into business with my best friend and we open up a salon and we both are 50-50 partners, we are going to be treated by the IRS as a partnership. Okay. And in doing that, being treated as a partnership, we're going to file Form 1065. So if you are a partnership, S Corp, C Corp, your business filing is always going to go first. Okay. So the Form 1065, if you were at tax time, would get completed for the business. And then the business would give each partner a form called a K1 form that just shows the split. So if you guys made money, it splits you down based on the percentage of ownership. And if you lost money, it still splits you down for a percentage of ownership. So that's just something to really keep in mind, that anytime that you're not a single member or a multi-member LLC, your business filings go first and they are separate from your personal return. Okay. Something about partner reporting. Each partner reports their share, like I said, on their own personal return. Okay. So if you made $100,000, obviously one partner is going to report 50, the other partner is going to report 50, just to keep it clean and simple. Okay. And that form is called a 1065. Something to note about partnerships is that you do not get all of the deductions at the personal level like you do with the Schedule C. What that means is that when I file that Form 1065, all of the income, the expenses, startup costs, all of that will go on that form. Partnerships do not pay tax. Partnerships do not pay tax at the corporate level. What happens is you file your 1065, I send it out to both partners, and now both partners are going to pay the self-employment tax at their personal income tax level on their returns. Corporations. Corporations is a big one, but just to kind of make it easy so you guys can get an idea of what a corporation looks like, that's all of your heavy hitters in the hair care industry. So your Redkins, your Paul Mitchells, L'Oreal's, things like that. Those are actual C corporations. Okay. I do have S Corp here with C Corps, but C Corps are the only actual true corporation. And what do I mean by that? So S Corps are not an actual entity. S Corps are a business, a LLC, electing to be a S Corp for tax purposes, or you're a C Corp electing to be an S Corp for tax purposes. So you may be asking yourself, like, well, according to the internet, it's a standalone entity. It is not. Okay. It is a entity classification. So I'm basically telling, if I'm a single member LLC and I want to get taxed now or elect to be an S corporation, it's because I don't want to pay self-employment tax. I don't want to pay the 15.3%. I would rather put myself on payroll and pay payroll taxes as if I was an actual employer versus paying the self-employment tax rate. Okay. So if you are an S Corp, you're going to file Form 1120S. This goes back to the same thing as the partnership. You do that first, and then each shareholder, because corporations don't have partners, they have shareholders or in boards of directors and things of that nature. You will not be taxed at that corporate level if you are an S Corp. Everything is going to flow down to you personally. So this is super important to know, because the internet hypes it up like you should be an S Corp, you should be an S Corp. But if it's just you have to really think if the effort of doing all of the requirements to become an S Corp and to stay in compliance once you're granted S Corp status, if it actually makes sense. So an easy way I tell my clients that come in as LLCs, let's wait till we net $50,000. Net income, $50,000. That's when it's going to be worth your while and it's going to be worth your time to become an S Corp. Unless you're like, hey, nope, I know I want to come out the gate and be an S Corp. And in that case, you're the employer and the employee because it's just you. So just remember, if that's what you want to do, that you need to have this amount of income sitting to the side, because that's what an employer would do if you were working for them. Okay. So this is why I don't recommend S Corp elections until you reach $50,000 in net income, because you have to pay yourself a reasonable wage and salary, and it has to be actual payroll, not you just taking distributions from the business. Okay. Then you have Form 1120, that's C Corps. So C Corps, obviously, like it sounds, they're taxed at the corporate level. They're subject to double taxation, and the dividends are distributed to shareholders. Okay. So remember, I told you the corp setups have shareholders. So, and they get paid out dividends. So most C Corps that are brand new or smaller, they elect to be S Corp just so they can bypass being taxed twice. So at the corporate level, because the corporation pays taxes, and now every shareholder is going to pay taxes on those dividends that they received from the corporation too. Okay. And that's why, like I said, a lot of people go with S Corp because you avoid the double taxation, but you really don't, because it's just not being taxed at the business level. But S Corps, partnerships, single and multi-member LLCs are pass-through entities. And that simply just means it passes through to you. Okay. Finance basic. So before we get further into the slides, there are some key financial terms that I want you guys to get very familiar with, and you may already be familiar with it. So profit is the money that's left after all the expenses are paid. Expenses are costs incurred in the operation of your business, and there are two types of expenses. There are fixed expenses and there are variable expenses. Fixed expenses is what you absolutely need to run your business. So if you have a salon space, obviously you pay rent, you pay utilities, things of that nature. Those are fixed expenses that you would have to pay them regardless if a client came in for service or not. Variable expenses are supplies, because you can have a month where you're buying a lot more supplies, and then 2 months from now, you didn't buy any supplies that month. So that would be considered a variable expense. Gross income is the total revenue generated before any deductions. This is super important to know because you guys are self-employed. You're going to want a home if you already don't have a home. You're going to want a car. You're going to want to do things that's going to require you to show that your income is where it needs to be to get approved. Most lenders do not go off of your gross income. They go off of net income. So what's left over after all the expenses have been accounted for. So as we get further in, I'll show you guys how I work that out with clients, especially because deductions will kill you every time. So getting your game plan together about what's your goals for the business is really going to help you really take care of how good this looks on paper or on a tax return. So the basics of bookkeeping, even if you choose to go to a different bookkeeper, if you're not going to bookkeep yourself and things like that, you should know what that bookkeeper is actually supposed to be doing. Okay. And the basics is it tracks all your financial transactions. It organizes them by categories. That is so important to stay organized. You don't know where everything is if you're like, hey, I have a receipt over here, I have a receipt over there. Oh, I don't know. Someone paid me in Cash App, Zelle, Venmo, plus the POS system at the salon. So I have income all over the place. So bookkeeping basically streamlines all of that into, I call it nice, pretty documents. Okay. But those documents are so crucial to being able to grow in the industry as a small business owner. I love digital tools. In 2024, there is no reason to have to manually do any type of accounting. Okay. My favorite is QuickBooks. And I think because QuickBooks, not only have they been around a long time, of course, but if you decide to go out on your own and do QuickBooks, you can literally call their customer service and they will walk you through. They will pour into your computer and they will try to assist you. So that's why I love QuickBooks and I always recommend them. So if you choose to do any other accounting platforms, that's totally fine. Just make sure that you have one and you have the level that you need. For example, QuickBooks offers a solopreneur plan now, right? The solopreneur plan, basically you connect your bank accounts and it kind of categorizes it, but it's not as customizable. So if you were going to QuickBooks, I would say absolutely, you need to get at least the simple start plan because it's going to allow you to grow or allow it to grow with the business. Okay. So don't get sidetracked when you look at things like that. Don't get sidetracked at all. And don't be afraid to go for the higher package. It's going to be worth it overall. Okay. Then there's something that I always tell clients just to remember how the financial flow goes. Okay. You make the money, you spend the money, and then you see what you have left over. That's how I always refer to it. But it's gross income, expenses, and net income. Remember, gross, that money is not yours yet because you have not paid out expenses. Okay. So you're always pulling from the net. Okay. And we always want to have a positive net whenever possible because that's what keeps us operational for month to month without you having to go back in and use your own personal funds to fund your business. A lot of salons, oh, okay. A lot of salons don't feel like they need bookkeeping services. If I could go back to when I very first started in the industry, this is the very first thing that I would have invested in. If I couldn't afford an actual CPA service, I absolutely should have got QuickBooks, because you look up and you're like, where did the money go? Where did the money go? Realistically, no one is going through their bank account looking at all of the transactions to be like, oh, okay, I think I spent a little bit more, or maybe I saved a little bit more. No. And that's why bookkeeping is not optional. All right. It gives you accurate financial tracking, it simplifies tax compliance, and strategic business planning. This is the difference between where you are now and where you could go. It's going to be the strategic business planning. But like the Paul Mitchells of the world, they start here. So most of us start at the artistry level. I want to get as many clients in. I want to do this service, that service. Paul Mitchell starts from the finance level, and then they work their way down. Okay. So more than likely, whenever you see a new product, example, being released from Paul Mitchell, they already have projections of how much that item is supposed to make, because they don't come from, we just want to make a great product for clients and professionals. No, we want to make money. So how do we make money and fulfill the demand at the same time? So you just want to keep that in your mind for your business. So if you have not, we are 7 months in the year, if you have not started organizing your stuff, this would be an absolute great time to do it. Okay. You can join QuickBooks. You can join FreshBooks. It's so many of them. Okay. And they will literally walk you through. If they don't walk you through, they will have some type of academy or university that you can go in and really learn how to do this step by step. All right. Also, making sure you guys are separating your personal and your business finances. Not only is it frowned upon by the IRS, but it is a headache when it's time for taxes and you're trying to figure out what transactions went where. Okay. So I am really going to really push you guys to make sure that you have a business bank account that is completely separate from your personal account, but it's the same account that all the ways that clients pay you, it goes into that account. Okay. And we'll get into different accounts a little bit later, but you want to make sure if clients pay you 5 different ways, that 5 different ways needs to flow to one bank account. Then once it goes to that bank account, you can disperse it where you need it to go if it's going to be moved to a different account. The reason why is because whenever you are trying to level up as a self-employed person, lenders, creditors, they want to see profit. A lot of times they want your bank statements. They want the last 3 months or the last 6 months of your bank statements. You want that money to hit that account. Okay. So I tell my clients that, hey, you go through the week, you're doing hair, you probably end on Saturday, right? Let that money stay there till Tuesday. Let it stay there till Wednesday, because now it's going to be recorded on that statement. And if you need to go take this statement to a car dealership, a mortgage lender, now they're going to say, okay, yeah, she's getting or he's getting the income in. So you just want to make sure that you are allowing the money to sit for a few days. A big question that I always get is like people that aren't on payroll. They're like, hey, how do I pay myself from my business and I don't have payroll? So if it's not payroll, it's considered a owner's draw. A owner's draw just literally means that you, the owner, are taking money out of the business. It doesn't do anything for your equity or anything like that, because that doesn't apply unless you are S Corp or C Corp in partnership status. So what you want to do If you want to consistently show in your personal account, hey, I actually pay myself, you will still allow the money to run through the business account. You're going to let it sit so it can get recorded on the bank statements. And then you are either going to ACH. Most banks ACH. You just set yourself up as a payee. Okay. And if your bank does not do that, then what you will want to do, you will actually want to either do a money order or a check, but something with your name on it. Why? Because when you go to deposit it or you do a mobile deposit in the bank, it has an image to it. So the whole goal here is to be trackable. You want to be trackable and you want to show that you actually make money. And bookkeeping will definitely help you with that as well. So we already know what bookkeeping is. How often should I be bookkeeping? Monthly, quarterly, and annually. Okay. Monthly, quarterly, and annually. So, of course, monthly, I love monthly because I get an opportunity to correct anything that's wrong. So, for example, we just ended June. So that means that all of the June bank statements and everything should be in by now because of where we are in July. I can look back at June and look at the profit and loss statements, all the financial documents, and I can tell you where we need to cut costs based off of that. So that's why that 30-day span window is super important. However, I know you guys are super busy. So if you can't do it monthly, at minimum quarterly, which is every 3 months, we have 4 quarters in a year. Okay. You have to do that. You do not want to go that far in time beyond 90 days and you don't know the financial health of the business. You can think, because visually, we're visual people, right? You can think that you're doing extremely well and the numbers may say different. Okay. So quarterly at minimum, preferably monthly. And annually is when you're getting ready for tax season. This should not be a job. Okay. This should not be a job to get all of your receipts and everything together. You guys have to, if you do that, you have to stop like immediately. You have to stop. And the reason why is because in the event that you are ever audited, a certified tax professional has to come in and assist on that audit, or I should say represent on that audit to say, hey, these are the source documents I relied on to reach this conclusion or why I took that deduction. Receipts and all of that stuff do not last. So the best thing would be is to get a accounting software where you go to Cosmoprof, you go to Sally's Beauty. As soon as they hand you the receipt, you take a picture of it, you throw the receipt away, and you never have to worry about it. And it automatically gets uploaded into your accounting software. And it's so funny because I literally used to take shoe boxes of receipts. You wouldn't catch me now doing it, but I used to take shoe boxes and the madness, like my living room would be full of receipts. It's crazy, but it's definitely worth the investment. And if you guys decide to invest in accounting software, it's totally deductible too. So just think of it as an investment. All right. And this was just basically that picture of why we do monthly, quarterly, annually, and what that actually looks like. So real-time insights. You don't want to look down the line or wait too long and it's too late to turn your business around. Okay. And that unfortunately has happened to a lot of people just because they didn't work as if a Paul Mitchell from the numbers down. Your numbers tell you what you can do in the business and what you can't. I'm very adamant about that. And the reason why I'm adamant about that, because people will see $50,000 in their bank account, but you have $35,000 in credit cards. That's not your money. We have to get this debt down. We have to get the liabilities down that the business owe first before it can actually be profit for you. Okay. Quarterly is super important as well, because if you expect to owe more than $1,000 in tax at the end of the year, the IRS says you have to send us something every quarter. Okay. For example, this quarter just started, third quarter just started, and it's going to end September 30th. So, what that looks like on the bookkeeping side, you review the last 90 days, you look at everything that happened, the net income, you're going to take your self-employment tax or pay your self-employment tax off of that net income that you had over that course of 3 months. Listen, if you get to the end of the year and you do owe, you automatically going to be assessed an underpayment penalty. So I tell clients, even if the numbers say that you should send $2,000 to the IRS, that should be your actual estimated tax payment. Trust me, they'll take 500 and you know that you still owe 1,500 from this quarter. You just want to get in the habit of actually doing it. Okay. It's very simple. You guys can go right to the IRS website. You don't even have to create an account in order to pay on the estimated taxes. I'm going to urge you guys to create an account, because if you ever need IRS transcripts or anything like that, you can get all of that inside of your account and you don't have to call and wait on hold for the IRS. All right. So expenses, rules of thumb. All right. So this is not speaking about the things that are considered expenses, although I know I have like budget, emergency fund, things like that. This is speaking about percentages. Okay. What percentage of my income should go towards, or revenue should go towards, labor costs? How much should go towards marketing spend, education, things like that? So you have to get that detailed. When you have this level of detail, you tend to not overspend. Okay. Overspending, and I get it. I was you guys. I totally was you guys. I was like, oh yeah, I'm going to buy that purse, or I'm going to buy those shoes because I have a fully booked out week next week. But the issue with that is that you never think about the rainy days. You never think that an injury can take you out for a few months. So you have to start to plan and really constrict yourself to a budget. Your budget can always grow as you grow. When you make more money, you can play a little harder. But until you actually know what those numbers are, you can't play at all. So for budget allocation, this is looking at all of the revenue that's coming in and what are we budgeting? We are budgeting product supplies, the essentials in the salon. Think about the back bar things and like that. The reason why you should allocate 10 to 15% of your monthly revenue towards those things, because remember, those are variable expenses, is because if not, you will overspend. So if you're a salon that does hair color, okay, and you actually have hair color stocked inventory, before you ever replace, or you say, hey, I'm out of one end, you actually have to go and actually look. Okay. And the reason why is you don't want to buy things that you don't need. You don't want to buy things that's not going to move fast. You just want to make sure that you are not overspending when it comes to products, because it's so easy to do. So for budget allocation, I say 10 to 15% of the monthly revenue. Some months you guys aren't going to need to buy products. So then you can redirect that 10 to 15% somewhere else. Okay. But just putting yourself on a product budget. So funny, because I always have to break my clients from being product junkies, because I was one too. I always say I'm a recovering product junkie. Labor costs. Labor cost for you guys that actually have staff, you have hourly and commission, should never be more than 40 to 50% of your revenue, your monthly revenue. If your labor costs are that high, you're going to have to start to look at productivity. Am I getting the most productivity out of this hourly or commission employee that I'm paying? Okay. Because I like to stay at like 40%, but sometimes people work extra and things like that. But once you get above that payroll is at 70% of your total revenue, it's a really time to go back and rethink some things. You may have to cut some hours. You may have to cut them not forever, but you have to cut them right now because you have to stabilize the business, because you're not going to be able to operate like that. And you're going to be operating in a deficit and having months where you're carrying no profit over because it's all going out for your employees. Of course, rent and utilities. So this one varies because it really varies on the location that you're in. Some people are in higher end areas and the market there is higher as far as rentals go. So I would say about 15% of your income, your total revenue, should be rent and utilities. A lot of times you are going to be over that. That's just the game of life. Okay. But if you can manage that cost, like I have a lot of stylists that are retiring, or I shouldn't even say retiring yet, but they're downsizing. So they're downsizing from their beautiful large salons and they're going into suites. Okay. Because at that point, why stay in that salon paying that amount when you don't need that space and you're not getting a return on that space anymore? So just basically always checking in on the rent and making sure that you have enough business coming in to cover the rent, because you haven't made any money until you've paid the rent. Okay. And the utilities, because without rent and utilities, you can't operate. Marketing spend. So about 5%. That's a personal preference. It's totally up to you how you want to spend on marketing. What I'm going to suggest about marketing campaigns is always having a budget. Okay. You have to have a budget. So if I know that fall is coming and you're a colorist and you're going to have some type of special and you want to push out marketing, now would be the time to create that budget for marketing. So that way you can get the push that you need and the exposure that you need, but you're not breaking the salon to do it in real time. So if you were doing a deal in the fall, now would be the time that you would be getting that marketing budget together. So maybe you don't have a marketing budget yet, but if you know, like, hey, I know I want to do X, Y, and Z for marketing, it's going to cost me this. Now you can start putting a little bit away towards that marketing budget. But marketing should never really go over 5 to 7%. If it does, the return needs to be major. Okay, that's coming back. So just being mindful about that, because marketing can get very expensive really fast. Equipment maintenance. And if you don't have equipment that has to be maintenance, like dryers and things like that, maintenance period, especially if you are a salon owner, you have to have a maintenance budget. When I was a salon owner, I came in one day and the whole hot water tank was gone. Like, it wasn't gone like anybody stole it, but it was shot. And the landlord was like, hey, I'll give you 50% on it, but I want you to cover the other 50%. Well, I was able to go to my maintenance fund and take that money to do that. I didn't want to, but I was happy that that money was actually there. And I didn't have to go and look at the revenue I brought in that week to cover that, or have to shut down because I didn't have hot water. So equipment, maintenance, budgets, 2 to 3%. 2 to 3%, guys, is not much at all. Okay. Education and training. This is one that you guys go crazy with. You don't need another class, okay? You don't need another class without maximizing the education that you already have. So because of that, and I'm so adamant about not mindlessly wasting money on education, y'all, because you're only one person, you can only do so much. I've taken courses $1,200, $1,500, and I may have done 2 or 3 people. So at that price point, if that wasn't going to be my pivot to only do that service or really, really push that service, it was a waste of money, basically. So for education, you should only be spending about 3 to 5% of your total revenue a year. Okay. Total revenue annually on education, unless you are educating maybe junior staff that's coming in, maybe the salon is taking an entire trip to Orlando premiere or something like that. That's when you spend on education. So when a client says, hey, I want to take this course, we go through this whole thing of, okay, and what do you plan on doing with it? And we have to break it down that much because I want you to let me know if you really, really want to do this because you're about to implement it as soon as you come back. If you're not, then we can absolutely wait. Then you have your emergency fund. Gotta have an emergency fund, y'all. Emergency fund should be at least 3 months of your business expenses. This isn't even counting your personal emergency fund at home, but 3 months of your business expenses is a must. Don't stress yourself out trying to throw 3 months in there right now. Maybe just start with 30 days and then you can build up to 60 days. But you have to have an emergency fund. So I believe I probably had been in the industry about 2 years. I ended up breaking my ankle. I went to the hospital. I ended up having to have surgery, and they told me that I was supposed to be down for like 4 weeks, and I was down for 3 months. Okay. And I ended up having to come back in the salon a lot faster than my doctor probably would have allowed if he knew, because I didn't have an emergency fund set up. And it was like, if I don't work, I can't eat. I can't feed my children. So having an emergency fund is very, very important. Tax savings. We're going to really dive deep into that in a minute. But tax savings, you should have a separate account for what you're going to save to pay your taxes. Okay. You can do just your self-employment tax. You can do your self-employment tax and your personal income tax. That's totally up to you. But you absolutely need to be saving at least the minimum, the 15.3% in a separate account. Then debt management. When you use credit for your operational cost, now that becomes a liability against the business. So it's fine to leverage debt to get where you need to be. That's totally fine. Everybody does it, but it's how you do it. You can't get to the point where your credit card bills are overriding or eating up all of your profits. So I say that debt management, unless you have some loan because you did a build out or things like that, should really be under 15% of your monthly revenue. Okay. After you cover your expenses, you cover the taxes, you should be able to reinvest at least 10% of profits back into the business for the next month. Okay. So I'll repeat that again. Once you've taken care of all the business, you should have at least 10% to go back and carry you through to the next period, the next month. So always to invest back in the business. If you are finding yourself at the point where you're like, ooh, I don't have it, you have to sit down and review your finances, because the numbers is going to tell you exactly where the money went and what you need to do to switch it up so you don't get into that type of situation again. Okay. All right. So financial statements are the holy grail. You have good financial statements, and good credit, of course. But good financial statements, you can get almost anything you want, even as self-employed. The reason why a lot of times lenders and creditors give people a hard time is because they don't have any of these statements at all. So they have to verbally take your word for whatever. Okay, so whenever you go to get any type of financing, anything like that, they're going to want to see these 3 types of financial statements, and they're going to want to see your tax return as well. So these statements do a few things. Financial health insights. Basically, it shows the overall health of the business. When you know what's going on, you can correct what's going on. When you don't know, sometimes it's too late and you can't go back. Okay. It helps with decision making. Going back to using Paul Mitchell, in any type of big name like that, decision making comes from these statements. Okay. They don't care how many times you write them and tell them to bring back this shampoo. Oh, it's not. No, it comes from the financial statements. So an example of that would be them discontinuing a line. Well, I'm sure the financial statement showed that we may be showing or incurring a loss on that line. So let's get that out of here, basically. So definitely want to be able to use your numbers in order to make strategic business decisions. Then you want to qualify for financing. Y'all, like, I don't want you guys to feel like you have to go get a job just so you can get assets in your life. You don't have to. You just have to make sure that you are record keeping properly, that anybody would be happy to finance you for anything that you need. Okay. And then it's tax preparation and compliance. It makes it so much easier when you have clean statements. Even if you guys are doing your own taxes yourself on like TurboTax or anything like that, you would be so happy with yourself. You will be less stressed out if you have financial statements, because literally you have to just follow them. That's it. And all of the numbers are running totals from the whole year or whenever you started bookkeeping. So they are clutch and in compliance as well. Okay. So if you don't really know what the statements actually do, so of course you guys probably hear about the P&L statement. I'm sorry, y'all. This air is on in here. Profit and loss, that's the most popular one. This basically tells you if the salon earned a profit or did it take a loss. But beyond that, on the profit and loss statements, it lists all the categories of expenses that you have. Okay. So you will have your advertising on there. You will have your business insurance on there. Everything will be listed line item by line item on the P&L statement. So not only does it tell you how much you made and how much you lost, it actually tells you what you spent your money on too. This has been really good to like catch little small transactions that you didn't even realize were coming out. So what did that client have? Verizon. She had Verizon and they double charged her for like 2 months in a row. 2 months in a row. And I kept seeing it come up and I'm like, She was like, no, I think I doubled up on the payment. I said, okay. We get to the next month and it happened again. And honestly, it was paying her sister's bill instead of hers. So she had to call Verizon and they ended up having to refund her. But it took me being able to go back and look at last month's statement to compare it to this one to know like, yeah, something is off. We usually normally only have one Verizon payment going off. So that's what you will see on the profit and loss. So the balance sheet shows how well the business is doing over time. So this is crucial that if you guys, some of you guys that are going to retire soon, things like that, and you want to sell your actual beauty business, the balance sheet is what a potential buyer is going to be looking for because it shows what you own, your assets. So all the dryers, all of the mirrors, all of the chairs, all of those are considered assets because you could sell them for a profit or sell them for money and do whatever you needed to do. What the salon owes is also on the balance sheet, and it's called a liability. So if you have business credit cards, things like that, that's going to show up on the balance sheet as liabilities. As long as you're carrying a balance on that card, it's going to show up on the balance sheet if you have it connected in your accounting software. And then the owner's stake in the salon equity. Okay. This doesn't, the equity is usually 100%. If you're a single owner, it's 100%. Okay. You don't have anybody to split equity with. Equity is important when you're in S Corp elections, when you're in partnerships, things like that, because you may have one partner that needed a $10,000 loan. Well, because we gave him the partnership, we gave him $10,000. Now that partner's equity has went down until that is repaid. So that's what owner's stake in the salon means. Then you have the statement of cash flows, and this tracks how much money is coming in and out over a select period of time. This shows you like your daily money management. So it shows you like what your beginning cash was at the top of the period, and then it'll show you what your ending cash was. And everything in between is just kind of like high level, I guess, high level profit loss. That's basically what it is. It's just going to look a little different, but it's high level profit loss statements. And it's the statement of cash flow. You won't see a lot of people ask for statement of cash flows, but it's possible. So you guys need to be familiar with what it actually is. And if you guys use a accounting software like QuickBooks, it's going to give you statement of cash flows based off of what the profit and loss in the balance sheet says. All right, so tax essentials for beauty professionals. Yes. So there are 4 types of tax that we really truly focus on. Self-employment tax, of course, number 1. Then you have federal income tax. You have sales tax if you sell products and you're in a municipality that requires you to collect sales tax. And then you have payroll taxes. So, of course, you only have payroll taxes if you're actually paying a staff, but you also may have payroll taxes if you're an S Corp or a C Corp. One thing I want to note right here about payroll taxes, single member LLCs cannot put themselves on payroll. You can actual payroll. You can hire your kids, you can hire your sister and pay them with actual payroll, but the IRS does not allow you to pay yourself. And if you do go sign up for payroll and they're like, oh no, it's fine, eventually they're going to be coming back around and say, hey, did you get an S Corp election or something yet? Because we have to have it, because that's how much it goes against the ethics through the IRS. All right. So self-employment tax is the big one. Self-employment tax is a mixture of Social Security and Medicare tax. Okay. Which is FICA. You would pay this automatically if you worked at Walmart. They would be taking Social Security and Medicare. Even when you adjust your dependents or how many exemptions you wanted to take, this doesn't change and it's going to come out regardless. So for being self-employed, because we don't have those withholdings throughout the year, we have to account for that 15.3%. And the purpose is for you to be able to get retirement benefits, disability benefits, and Medicare eligibility. Okay. Essentially, everybody, you guys already know, that pays into the pot for these services. So it's the same if you were self-employed. So what I suggested to a client that was like, hey, I'm really not caring about Medicare, disability and stuff. She's paying her FICA tax. And I was telling her that she could pay for long-term care. So I'm telling you guys too, long-term care is something that you can also pay for now while you don't need it. And it'll be extremely cheap, that possibly may have disability benefits. As far as retirement benefits, you guys can actually get your own 401k accounts as a solopreneur. And for Medicare eligibility, it's just really getting that long-term insurance and not relying so much on the retirement benefits. But needless to say about that, you absolutely have to pay the self-employment tax. Okay. So 12.4% of that amount is Social Security, and then Medicare is 2.9%. So if you look at your IRS, if you go pull a tax return that you have from last year, you're going to have something called a Schedule SE. That's where your Social Security and Medicare tax is listed, and it tells you how much you owe. So if you haven't paid anything, any estimated taxes all year, this is that is going to be the sheet that says, hey, you owe X amount of Z. Okay. Schedule SC. So make sure that when you guys go to prepare, is that you are looking over your Schedule C's very well, and you're looking over your Schedule SE, because you don't want to get hit with a tax bill that you didn't even know that you were going to have because you kind of blindly trusted someone to do your return. All right, so how do I plan for SE tax? The best way for our industry is to save for taxes. How we make our money. We make our money on a weekly basis. So that's how I suggest to save for taxes. So of course, self-employment tax is only going to be due on your net profits. That's it. After all the deductions and everything have been taken. Now, we're not talking about if you got dependents and things like that. This is strictly on the business income. So how it works is, like, if you had $100,000 in gross revenue and $40,000 in expenses, you're only going to have SE tax on that $60,000. Okay. But not including anything else that you may qualify for. $60,000 times 15.3% would mean that you owe $9,180. And this is just self-employment tax. Okay. Just self-employment tax. So just kind of think about that and keep this example like in your mind if you want to take a screenshot of it so you can see how this works, because we haven't even got to the personal income tax rates yet. So make the money, save the money on a weekly basis. So how do you determine what you should be saving weekly for your SC tax? So what this formula is going to show you is how to determine your savings percentage. So 15.3% is the minimum that you can save. Okay. But remember, that's just SC tax. I always suggest getting closer up to that 30%. And the reason why is because you want to already have that money in the bank, not just for SC tax, but for your personal tax. So if you just used 15.3% and you had a weekly income of $1,000, that means that you should be saving $153 a week for taxes, for self-employment tax, divided by 4 days behind the chair, and that's less than $40 a day. So self-employment tax absolutely can be done, and it can be done without breaking the bank. What you don't want to happen is that big lump sum that comes to you at the end of the year, and then you have to get on some type of installment agreement with the IRS because you underpaid in tax, or you didn't realize you were even going to owe that much. All right, federal income tax. So if you guys didn't know, your personal income tax rate depends on your AGI. Your adjusted gross income is, remember I said, hey, your net income for the Schedule C is just for the business income. Well, your AGI includes that you have dependents or you went to school and you have retirement contributions. That's the money that becomes your taxable income. Okay. Tax rates are progressive, meaning the higher you go up, obviously you pay more in taxes. And that range is 10% to 37%. I didn't have enough space to be able to put that actual chart in here so you guys could see. But if you go on to, or just Google the federal tax bracket, and it will show you what your income tax level is personally. Okay. And it's based off of your filing status. So single people have a separate all of them go from 10 to 37%. But single people have a separate tax flow. If you're married, filing jointly, you have a different tax flow. Filing separately, but you're married, same thing. And then you have head of household. Okay. So if you combine that 15.3% that you already owe into your federal income tax rate, there's a strong possibility that you may actually be well over 40% income tax rate. Okay. That's important to know because we don't take that into account when we are saving for tax purposes. And then we get to the end and we're like, oh my gosh, why do I have a bill? Because you didn't think about your personal income tax rate. And this is especially true for you guys that are married. So if you are married and your spouse has a really good job, you guys file jointly, you guys are going to owe. And there's only so much you can expense down to try to owe less, but you are absolutely going to owe because your spouse's income taxes is not that they've already had withheld throughout the year is not going to be enough to cover what you're going to owe for self-employment tax, as well as what you guys are going to get taxed at jointly for your personal income tax rate. All right, so we are moving along to tax deductions. So I wanted to give y'all some that a lot of people do not utilize. And if they do utilize them, they don't utilize them correctly. Okay, so some uncommon tax deductions. You guys know all the rest of them, advertising, supplies, things like that. But these are missed opportunities if you're not utilizing them. So cost of goods sold. Cost of goods sold is basically what you use to retail, not even to retail, but like back bar, or say that you have a product line that's exclusive to your salon and you get it from a manufacturer in California. That is considered cost of goods sold. If you are coming out with a spa treatment, a spa bag or something like that, and you bring in a little mini staff to package everything, that's cost of labor. That's cost of goods sold as well. So you want to make sure that you track all of that. Really important if you guys carry retail, very important if you guys have color in the salon. You want to make sure that you are accounting for the inventory that you have. So if you have not ever used cost of goods sold before or used it in a tax deduction way, this is what I would do if I was you. I would start tracking now from where you are. Your beginning inventory is going to be zero, just to start fresh. Your beginning inventory is going to be zero. You're going to track how much you spent thus far. So whether or not you got to go pull invoices for delivery, anything, track how much and just keep tracking it. Okay. Because at the end of the year, it's going to say, what are those costs and what was left over? Okay. So say you started at zero, you sold, I don't want to say you sold, you purchased $20,000 worth of inventory. You sold $15,000 of that inventory throughout the year. Okay. Your beginning inventory for 2025 is going to be $5,000. That's how it works. It's just a running sheet. But a lot of people underuse this area and they just kind of lump it into supplies. Remember that when you are thinking about deductions, they have to be reasonable and ordinary. So if you spent $20,000, you wouldn't want to put that in your supply costs because you still went and bought products. You bought this, you bought that, utilize the cost of goods sold. Retirement plans is a missed opportunity. Y'all, we can actually get good retirement plans as self-employed people. So retirement plans is a missed tax deduction, and you don't have to itemize in order to actually take that deduction. And the way I look at it is if you're going to pay this amount in self-employment tax, let's just say the $9,000 in self-employment tax, wouldn't you rather redirect $6,000 to a retirement plan that you can use down the line versus giving the money to the IRS just because they said that you owed it? Okay. Healthcare expenses, healthcare premiums, even if you don't get a 1095, are deductible. What they would go on, they would actually go on your Schedule C. So a lot of times you see on the Schedule C, it says health insurance other than health, but you can always write that in as a miscellaneous expense. Then you have research and development credits. So if you have a product that you're working on, you have an innovative tool that you want to manufacture or you're going to manufacture, research and development credits are the jam. Okay. They really give you almost not dollar for dollar, but almost dollar for dollar of what you spent out for research and development. Because if you ever realize, the IRS incentivizes us of what they want us to do. So research and development has been one that's been creeping up for at least the last 3-4 years, maybe a little bit longer than that. But the people that's taking advantage of this is like the L'Oreals, the Paul Mitchells, but you as a small business owner can absolutely take advantage of it yourself. That is more of an advanced tax strategy. So I'm always going to say go to a professional that specializes in that particular credit. Don't take anybody's word for it that they know how to do it, because it's very easy to get yourself audited using it if it's incorrect. Remember, your business expenses have to be ordinary and necessary. Ordinary means it's common and it's accepted in your industry. So that would be a POS system. It's common, it's accepted in the industry. Everybody doesn't have a POS system, but a lot of people do. So with that being said, that would be considered an ordinary expense. Necessary expenses are what you absolutely have to do your job. Okay. So use an example of commuting. People always ask me like, hey, I drive to the salon every day. Can I write off my mileage? No. You can write off your mileage when you are going outside of the workplace for work things. So the IRS looks at it as it's reasonably necessary that you're going to drive to work because you don't work from home. So that's why commuting, it would not be a ordinary or necessary expense unless you were going off site, of course. Okay. So tax planning, now is the time to tax plan. So you got your quarterly tax payments. You want to do this to avoid that shock at the end of the year. You want to utilize accounting software. The accounting software, y'all, is just really such a dope thing because it will do, if you set it up right, it will do everything that you need it to do and keep you guys in compliance without having to be so hands-on with it. Maximize your deductions. You guys should really be looking for tax professionals that know the industry, that knows the day-to-day, what we can do and what we can't do. A lot of times, and I know some of you guys do a great job of doing them yourselves as well, but you may be missing out on money. You may be leaving money on the table. So it would be worth at least to go sit down with a tax professional. Okay. Make sure you report all income. Under reporting your income is bad because you have no growth. You can't grow when you're under reporting your income. Remember, anybody that wants to give you money or you want money from them, they want to see what that net income is. Don't be scared about taxes, self-employment tax and personal income tax. It's just the way of the land. You just have to get a grip on how you're going to handle it and plan for it versus I'm just going to say I made $10,000 for the year. Okay, well, when you want to go buy your dream house, they're going to say, well, I'm sorry, we can't approve you because you only showed that you made $10,000 for the last 5 years. So don't under-report your income. Make sure you guys are meeting your deadlines. When it comes to estimated tax payments, I would rather for you guys to be late, but still get a payment over for estimated tax payments. But when it comes down to actual tax filing, if you know you are not going to be ready to file by April, make sure you just put an extension in. That's kind of common knowledge, but deadlines is how the IRS, missed deadlines is how the IRS makes their money. because they start charging you from the next day, basically. Proper deductions. You have to be able to prove the deductions that you claim. So if you stay audit ready, you don't have to get ready in case the audit happens to you. An IRS agent could audit you for one particular tax year, or he could go back and ask for the last 3. So with that being said, making sure that you have those proper deductions. Okay. Last thing, beneficial owner reporting. This is not talked about enough in our circle, our industry. Beneficial owner reporting is what they came out with what passed, I should say, last year. And basically, it's the government wants to know every business owner that's incorporated in with the Secretary of State within the United States. And they're doing this because they're trying to prevent money laundering, tax evasion, and things like that. But it is an absolute requirement to do. And I will be getting Kristen over some information for you guys about that as well, so you can see what you need to do. So if you started your business prior to January 1st of 2024, your required initial filing is going to be due on January 1st, 2025. Now, it's not as how people are saying like, oh my God, you automatically get charged $500. No, they give you an opportunity to correct it. They give you 30 days. But if you don't get it in that 30 days, FinCEN.gov actually has the right, to penalize you for the $500 a day. So that is something that I really want you guys to think about. Go on the website. You can go to FinCEN.gov. That's going to break down and probably answer any questions that you have about it. But I'm feeling like we think in the industry that we are exempt. Now, they do have a list of exempt professions, but it's not us. So just making sure you guys get that in. I wouldn't wait. I would do it as soon as possible, to be honest. So just making sure you get that done and avoiding any type of penalties. Okay. All right. So hopefully you guys aren't sick of me yet. Hopefully you guys aren't sick of me. I was so happy to be able to do this. And I know it's boring because it's taxes and it's not the sexy stuff, but it's the necessary stuff. And one of the things that I created was the Beauty Barber Finance Camp. So if you're looking to become like your own bookkeeper, you're like, yep, I don't want to pay anybody right now. I can't afford a CPA yet, but I want to learn and master how to do this on my own. Then this course is for you. Okay. We're hosting it August 4th and the 5th. And even though it says what's included over here, there's so much more. So like business credit building, not just the trade lines and things like that, but even what is business credit? Who controls business credit? All of those things are relevant, okay? And it's just going to be a really, really good time. And I have some other bonuses for you guys as well, too, that want to sign up. But this totally up to you. This is for serious people who know that they want to implement, because this will be an intense training, but you're going to walk away being able to handle your business finances. So I just wanted to invite you guys to that. And if you can make it, that'll be awesome. If not, I completely understand. We always have things going on. Okay, so I'm going to stop sharing and I want to hear some of you guys' questions.
Amazing. And in time too, because we have a ton that have been coming in throughout the entire presentation. So this is
okay.
perfect. Oh yeah, no, we are invested here. So one of our first questions is, this will cooperate with me. This is from Daniela. I am a sole proprietor. I believe this was in reference to slide 4. They're a sole proprietor. Does that not apply for me then?
As far as bookkeeping?
I believe that was in when it comes to the proprietorship section.
Okay. So the reason why I didn't mention sole proprietor is because So single member LLCs are treated as sole proprietors too for tax purposes. However, I never suggest you stay a sole proprietor. You need that LLC protection for the business. So bookkeeping still applies because you're still in business.
Amazing. This was a comment / question. One attendee did get QuickBooks and didn't found it to be super, super helpful at the time. Do you believe that they've improved the way that they teach now that they teach the consumers in a better form than they used to?
I completely understand. So QuickBooks, if you're going through like their Q&A, like on their website, it's a nightmare. Call in to the team. So, and I'll say that I haven't had a bad experience calling in, or you can even start a chat inside of QuickBooks as well. And if they need to pour in, they'll pour in. But it's also kind of going to be a matter of what exactly did you need help with as well. So setup, or do you need help with the ongoing actually services? And they have a live bookkeeper program now too. So you could get someone in real time to jump on.
Amazing. Somebody wanted to know what it was called again when you go to the bank, when you were speaking about not taking the money immediately out and letting it sit.
Mm-hmm. Oh, owner's draw. So it's an owner's draw. So you're just drawing money from the business for yourself. You just want to be strategic about how you do it. We want the money to show in the business side, and then we're either going to ACH ourselves out as a payee, or you're going to actually write a check, money order, something like that.
Amazing. Next question is, do you advise to get on a quarterly schedule with the IRS for tax payment, or wait until the end of the year to pay owed taxes in a lump sum?
I would say quarterly, even if you missed the first 2 quarters of the year. The reason why is because you don't know exactly how much you're going to owe yet. And if you do owe anything, you're going to pay an underpayment penalty because they consider it as late. Even if it's not April 15th, they're going to consider it as late because they're going to say you should have paid these quarters last year. Quarterly for sure.
Then what are the best ways to bookkeep?
Categories. So what I would do if I was just starting, before you even get the software, I would write down what's all my fixed expenses, okay? What's all of my variable expenses. So if I look at my fixed expenses, you're going to have a separate category for rent, okay? Nothing else goes in that category but rent. So when you go into your software, you just create a category for rent. You see what I'm saying? So you're basically totaling everything up, but you're just organizing it while you're doing it. So what I mean by that is if you wanted to bookkeep for July, I'm not going to say wait till the end of the month and then just add everything together. As things are happening now, write them down, organize them, but organize them in a way, if you're going to be your own bookkeeper, that you understand what's going on and that you can follow.
Fantastic. Is the cost of website maintenance considered a marketing expense?
Yes, or advertising, either or. Either or.
Okay. Can cost of goods sold be hair color, or is that a supply cost?
So if you carry inventory, like you're providing it for the clients, like you're not just running out to go get it when a client comes, then yes, it's cost of goods sold. And that's why it's so important to have like an inventory system. I know the POS systems kind of have the inventory systems attached to it, but just implementing that if you do carry it.
What should I do if I haven't been reporting my taxes quarterly? Is it too late? I just started my LLC last May.
Last May? No, it's never too late. Never too late. Just do it at the end of this quarter. This quarter ends September 30th. So when the quarter ends September 30th, they give you like a week and a half to actually make the payment. So you'll have to like October 13th, 14th to make the payment. So yeah, just put yourself on a trial run, and that'll be good practice for you as well too.
Amazing. Are you accepting new clients? I'm an esthetician and my BF is a barber. We really need help with our bookkeeping and I need a tax preparer.
Oh, yes, we're always accepting new clients. Absolutely. Yep.
Amazing.
If you go, I don't know if she dropped the link, but if you go to the website, if you scroll down and it says work with us, then you'll be able to schedule a consultation.
Amazing. And then for everybody, I will be dropping all of this information again in the follow-up email that you'll be receiving tomorrow. So you'll also have access to the links beyond just this webinar as well. And then I'm going to do a last call for questions just because I know we are gone a little bit over time.
Yeah.
We did have
I'm sorry,
somebody.
guys.
We still have questions coming in, so we are still invested.
Okay.
Which we all greatly appreciate. Somebody did ask how much is the boot camp?
1 second. I'm so sorry. This room in the air. Oh my gosh. The boot camp is $297, and we do offer Afterpay and Klarna as well.
Fantastic. Then, the person that asked about if you're accepting new clients said that they did schedule a discovery call. It was a discovery call. What I should be scheduling?
Oh, I seen it. Yeah, you're fine. We'll talk. I've seen it.
Then I'm going to do one last call for everybody. And if you still do have questions that we just don't have time to answer today, I will be dropping Malika's information in the chat. And then again, in the email you'll be receiving tomorrow. So you will be able to directly connect with her beyond the call today and can take up anything else from there. Oh, we have one more. If you're a single member LLC, is the only way to pay yourself, aka showing the pay stubs or proof of funds, to do the ACH option you mentioned?
So you shouldn't need like proof of funds or anything like that. So what's going to happen is that you're going to go from the business bank account. That's automatically going to have ACH attached to it because it's a business account. And then for like, if you were going to a lender, you would just take your bank statements. They're just going to go line by line. It's like, hey, I consistently get this paid like this every week. And when it's trackable, and then if you have those financial statements, the P&L statements, your owner's draw would be on there too, of how much you took out. So you shouldn't need proof of funds or anything like that. I hope I answered that question right. If not, just DM me on Instagram.
Amazing. And last and final question. I would like to know if I can have expenses from a medical condition that is directly related to salon work hazard be used as a tax deduction. Example, hair got into something and got infected and caused a staph infection, or an injury that was directly caused on site, whether by a cut, direct impact hit, etc. I didn't have enough expenses to itemize, so I took a standard deduction. I wonder if I could have used those expenses as a deduction on Schedule C because it was a work-related medical issue.
You could have. Yeah, so it's hard to itemize for like health because they want it to be like 12.7% over your adjusted gross income in order to itemize. If not, they don't count it. But yeah, so what you'll do, I don't like to use the miscellaneous part of the Schedule C, but sometimes it's necessary, like situations like this. So you would say, hey, employee injury. It was a work accident, and then you just expense it down. But just make sure that you actually type it out. You don't have to say what happened. You're just saying medical expense accident, something along those lines. So when a reviewer looks at your return, he's like, oh, okay, that's fine. You don't have to go into detail that it was you. And I don't want to say that and it's recorded and somebody's like, oh my God, she's like, no, you don't have to say it was you.
Amazing. Perfect. I know we probably still have a few questions lingering, but I know we've already gone a little bit over time already.
Yeah.
So again, for everybody that still has questions, that if they weren't 100% answered today, I will be sending a follow-up email tomorrow with all of Malika's information. You can DM either us or Malika directly with any of the additional questions, comments, suggestions, or anything else in between. You'll also be receiving your full recording tomorrow as well. So you can go back, rewatch, rewind, replay, and get everything that you need to know. And I
Yes.
want to thank everybody so much again for attending. Malika, thank you so much for being an incredible guest host and answering all of these amazing questions from these amazing attendees. So thank you everybody
Thank you
again.
guys for having
Have an
me.
amazing day.